back to It's the Economy. Actually, let's start with the currency. The currency at the moment is stable at where we ended yesterday, 90.56 per dollar. And early morning trades did see the currency strengthen a bit to about 90.48. Now, what's going for the currency is that from February 2nd till today, every single day, there have been FII inflows. Like yesterday, it is sometimes not even like $1 million. It's a very small amount. And then there are days like the day after the deal when we got 5,600 crores, which, amounts to some $600 million. The flow has been extremely erratic, but there have been positive flows every single day. And that's given the currency some kind of a roof. Given the dollar some kind of a roof and the rupee some kind of a bottom since the announcement of the US trade deal. The FII flows have come in as well as sentiment has improved. That's as far as the rupee is concerned. When you come to the broad economy, the only index we have is, of course, the Nifty. And that, if you take it from February 3rd, the first trading day after the announcement of the deal, up to today, almost a 1,000-point rise in the Nifty. Expectation, therefore, that the economy will do well. Of course, not all can be attributed to the US deal itself. You can attribute textiles and leather perhaps to the US deal. But a large part of the bank Nifty improvement was because SBI announced far better than expected results. So there are many things working here. But overall, both the economy representative in the Nifty and the currency have done well after the deal. Well, to take the action forward as to how exactly the economy and the currency may pan out in the days to come, I have with me two experts. Arup, Rakshit, the head of global markets and treasury at HDFC Bank, joins us. In a bit, we will be joined by Santanu Sengupta, the economist at Goldman Sachs. Arup, good morning and thank you very much for joining me. What's your call on the currency itself at 90.50, 90.60, thereabouts? Has it got legs to run higher? The rupee, that is.
Good morning, Latha, and thanks for inviting me here. No, sir, I think I continue to hold the view which I had said a couple of months back, even before the deal was anywhere nearby. Rupee would expect rupee to trade a 90 and 92 range. I don't think we are likely to see anything below 89.80 at this juncture. See, I think, yes, we have started seeing FII flows coming back into the system. There is a positive sentiment. Somewhere, I was going to talk about the dollar index. It's there on the screen. Somewhere we'll also have to keep a watch on the dollar index. At a 96.5 levels, I still don't think rupee will go below 90 or 89.80 levels. But if dollar index keeps falling and it goes somewhere below, more towards a 90 level, which can be a possibility given that there is a talk about a general dollar weakness across. That can then lead to a rupee appreciating further. But for the moment, I still think an 89, 80, 92 levels kind of a range is where we will likely to see.
Okay, so a little south of 90, the dollar can go.
Little south, depending if there is a bunched up flows which comes in, it can come down to
89, 80. But otherwise, you expect it to be above 90.
I expect it to be above 90.
Okay. The more crucial question is really on the economy, and Santanu Sengupta is with us. Shantanu, when we last spoke after the deal, you said you see a 20 basis point bump up on the GDP, on India's GDP, and you had taken it to 6.9% for calendar 2026. Do you have a number for FY27? And if you can tell us what exactly will work well, why have you upgraded it?
Yeah, thanks, Latha. So our fiscal year number is 7%, which is sort of the midpoint of where the economic survey would be. We were at 6.8 earlier. Look, there are two things happening. One is on the trade side. This is just the arithmetic will get you better. We have also brought down our current account numbers from -1% of GDP to -0.8% of GDP. But what we haven't yet baked in, because that is more second half of the year or possibly to the second half of more of the fiscal year, is that the investment uncertainty, our understanding would have held back investments, private capex. And therefore, with this uncertainty overhang now gone, some of this we think will come back in a couple of quarters' time. As Arup mentioned, you're already seeing the turnaround in FPI flows. You're already $1.5 billion positive in the first 10 days of February versus about $3 billion negative in the month of January. So you can already see the sentiment changing around a little bit as we close in on the deal.
Okay. Since you refer to the current account deficit, let me take you up on that. You have cut, as you said, the current account deficit 2.8, that is, you brought it down by a quarter percentage point. Is there not a fear that it can also rise? One, because we may have to purchase slightly more expensive crude oil, and two, because we have a gun to our head in terms of having to import more from the United States. So is it not possible that trade deficit actually takes a hit?
Well, the way it works out is not like linear arithmetic, right? So, you know, what we call is the general equilibrium is what will work out eventually. You're having multiple trade deals getting signed. We think this will be eventually quite positive for India's export potential also. The other thing that, you know, throughout the last couple of years we have found is that services exports have consistently been surprising on the upside. Even if you hold it constant as a percentage of GDP, which means that you're not letting it grow much faster than what the overall economy is growing, we think that you can contain the current account deficit within 1% of GDP. The point where it expands beyond, and let's say goes to 1.5 or 2% of GDP, can be mirroring a very strong capex cycle. So if you have your investment growth very high, at that point of time, you can have imports of machinery products and so forth, which can expand your current account deficit. But that will be, again, mirroring very strong growth on the public capex, on the private capex side. So overall, that is good for the economy. I mean, look, the main point I want to make is that, the uncertainty overhang was quite a big deal for FII investors as well as private capex. That is gone. And therefore, in the second half of the year, you're going to see some of this capex come back, and you're already seeing the turnaround in FDI flows.
Okay. Yeah, I agree. FDI flows have been good, but it was the net FDI which was a pain, not really the gross FDI. But I'll come to that in just a minute. Arup, what's your sense about how the Reserve Bank may act? Is it likely to allow an appreciation? I mean, just, speculating that as we come towards March, it is usually a BOP surplus month. And we could see both exporter sales as well as FPI sales of dollars, that is. Do you see the Reserve Bank resisting appreciation?
Latha, I think Reserve Bank has been very clear in their policy of stalling excessive volatility. So I don't think that they will have any levels in mind. If there is an excessive volatility, even there is an excessive appreciation, and that's what I said, you might see some amount of buying of dollars coming from RBI in that scenario. But I doubt whether there will be any targeted buying or a targeted level which they would have in mind. They have stuck to the fact that we will control volatility, and that's about it. So I don't think too much of an appreciation would be there, as I had mentioned on the levels. Just one point on this, the import part, which there is a lot of talk that India will have to import excessively from US. See, the fact of the matter remains that India will import what is needed. Now, the country basket may change. And also the talk about the quantum that people are going around, that's over a period, over a medium-term period. So it's not that the first year itself, it's equally divided into 5 equal buckets or something like that. So
No, it's not.
So that's the point. So as Shantanu did mention, I mean, only when the capex cycle picks up, you'll see a more imports kind of a thing picking up. But otherwise, it will be a more distributed thing. And some of these agreements are, or a part of the agreements are already in place. We are looking to, as in the private sector, we are always looking to buy some of the from the aircraft industries and all that. So those are there already. I mean, so this 500 may actually subsume into all those.
No, I agree with you, but there have been experts who have done the math, and even if you look at all the aircraft delivered and deliverable by Boeing, it works to about $60 billion. 500 billion is still a distance away, and there was this overnight scare which was very wild on social media that White House changed the word. Intends to import 500 billion to commits. India commits to import 500 billion. And in a few hours, that word went back to status quo ante and it became intends to import. So, we are living in very shaky ground here. But that apart, Santanu, are you, worried that there can be impact on Indian industry because of cheaper imports?
Ultimately, over time, Latha, you just become more competitive, right? With more imports of goods which are not strategic in nature. And I think the government is being very astute about keeping strategic sectors away from completely opening up.
Okay.
And you're having multiple deals across the EU, the US. There's been a UAE already, and
Yes.
there's conversations on the GCC going on. New Zealand, and so on. So I think what I would say is that overall, we are becoming a more open economy. This will mean more products to choose from. We have become more open since the last 30 years also. Ultimately, it's meant that Indian industries have become more competitive. So over the medium term, we would not really look upon this as a big threat to industry. Okay. Ultimately, what is important is for the private capex cycle to really pick up. And if the uncertainty overhang makes that possible, we think a lot of these problems will be behind us.
Okay, a bit of a rapid fire because I want to get some numbers from both of you. Santanu, your rupee range for the next quarter and for the year?
Yeah, we are at 90.92. We don't think this is going back below 90. You have a short forward book. B, if even at a 0.8% of GDP current account deficit, we think that it is appropriate that the rupee will be in the 90-92 range and maybe a little bit higher over the 6 to 12 month period, around 93 odd.
Oh, 93. Okay, I got a 94 in my previous discussions with
our 12-month forecast is 94, but over a 6 month period we are at 92, 93.
Okay, then not very different. Arup, would you see 93, 94 this year itself?
No, I would tend to agree with Shantanu. Okay. The numbers are similar.
All right. A quick word. I mean, it's a difficult question because tomorrow we are going to get a new series of the CPI. But regardless, there is a huge borrowing program. So what are you expecting in terms of 10-year yields, Shantanu, for the next quarter and for the year?
As you know, we do not put out a forecast for the 10-year, but I would say that the curve remains steep, given just the mix of policy now, both on the borrowing side as well as on the RBI. The RBI, again, the steepness is mainly, the long end aside. On the short end, I think what's going on is that they're being really committed towards injecting liquidity.
Yes.
And that will keep the short end sort of anchored. The very short end, I mean, the overnight sort of anchored. Yes. Whereas this borrowing program overhang will remain on the markets for a bit.
Yeah, both happened overnight. The call yields and the TREPs went down to 4.25 actually, 4.5. And we saw the SDL, the state loans, keeping the 10-year up at 6.7372. Arup, your range, at least for the quarter, for the 10-year?
I think the upside will be capped around the 675, 680. I don't see the 10-year yield going beyond that. Downside, I think maybe a 660, but that depends on what kind of a liquidity support suddenly comes in, if it is required and all. But I think it will be a very narrow range for the quarter.
Okay. All right, we'll leave it at that. We'll have many more impulses when the new GDP series comes and tomorrow when the new CPI series comes to ask you all fresh questions. Thank you very much, Santanu and Arup, for joining me. We wrap up on Bazaar on that note. Chart Bust is coming up.